Uh-oh. All right. Let's see. Good morning, everybody. Hey, Brandy, first one in the live. Hello, hello, hello. Good morning, good morning. I'm going to wait for a couple more people to join. In the meantime, if you're sticking around and you want to watch the most must-see finance live on all of TikTok, hit that screen a whole bunch. It helps as early on in the live as possible. It just brings a lot more traffic in. TikTok pushes out views or pushes out lives that are getting a lot of engagement. So if you smack your screen like 20 or 30 times in a row as fast as you can, it'll bring in more traffic and it'll make these lives way more lively. More people, more questions, better, more entertaining live. So hit that screen a whole bunch, get ready. We got a Bitcoin ETF today. The Bitcoin ETFs have been green lit. Bitcoin is flying this morning. Bitcoin flying. Who owns any Bitcoin? I got a lot of DMs yesterday from people asking what I thought. Hey, thank you all for the likes. There we go. You see, it's working. WWE, why not WWF? It was WWF at one time. Even my WWE stock was WWF ticker symbol. They changed it all. Good morning. Hello. Bitcoin ETF is on, and Bitcoin is cruising this morning. Bitcoin currently $48,650. It is up 4.24% today because of the approval, SEC approval. It says here some comments were filtered to protect the community experience. I don't know who's saying mean things, but I only just started. What could you possibly say so early on in the live? Anya, thank you for the heart. 400 people in the live this morning, and we're all here because of the Bitcoin ETF, which just got approved today. CPI data came in a little hot. In other words, higher than they were expecting, I guess. Let's see what the headline is here. I had my CNBC on the screen and I closed it. Goldman upgrades Apple ahead of earnings. What do you think of Amazon projections? I'm very long-term bullish on Amazon. Amazon is going to be in everything. Healthcare, movies, pharmaceuticals, cars, music. I said movies already. Grocery, they're in food. I mean, this company is massive. I would imagine at a certain point the growth will slow down for Amazon as they will have saturated every single market that they are in. And at some point in the future, I would imagine Amazon would have a dividend. Amazon AMZY is the Amazon covered call. Amazon isn't like that volatile of a stock. So the dividend, it's not even posted yet on what it's going to be because this Amazon Yield Max ETF is too new. But like we always say, as soon as the volatility in a stock cools down, the fund will lose money and the dividend will decrease. So that's a risk to be aware of. Especially for a company like Amazon, which already isn't that volatile compared to some other things like Coinbase or Nvidia. Bob from accounting, thank you for the follow. Rick Gilbert says Goldman upgraded Apple ahead of earnings. No surprise there. Apple's going to do, I think, well, long term. Quarter by quarter could change. Doesn't bother me. Let's see here. Apple's earnings are February 1st, so coming up. Should be interesting. Hey, hi, good morning, hello. So if not as volatile, should be... I didn't understand that. Thoughts on Tesla falling back into the 220s? Let's take a look. As always, I forgot to open my... Thinkorswim. So that's what I'm going to use to look at the Tesla one. And then I see Miss T. Hello, good morning. You're asking about MTN. This is Vail Resorts. It's got a pretty good dividend at 3.84%. Profitability grade is B+, which is good. However, they have a dividend safety grade of D+, which is not great. They only have 1 year of dividend growth, period. And they have a, let's see here. The stock is $213 a share. In the last 12 months, it's down almost 15%. In the last 5 years, it's only up 5%. And in the last decade, it's up a lot. It's up 195%, which is pretty good. Let's take a look here. MTN. And then once my thing opens up, we'll look at Tesla. Let's see here. Vail Resorts has a 1 year price target of 265, which is really, really solid. That would be approximately 25% potential upside if these analysts were right, which we know they're only right about 30% of the time. But even if they say 265 and 86 cents. So if Vail Resorts gets 264, the analyst was wrong. But there's no way to really measure how close they got to their price target. I guess maybe there is a way, but they don't do that. Highest price target is 290. Lowest price target is 225. There are no sell orders. Vail Resorts only has 7 analysts covering the stock, 4 holds, 3 buys. Let's take a look at Tesla. The question was, will Tesla drop below 220? User, let me see what your comments are. Hello, how would you recommend learning more about the stock market? I invest a little here and there. Follow me, watch all my videos. I have a whole entire playlist on TikTok for investing for beginners. I have similar playlists on my YouTube channel. If you go on my website, I can't write the text here because TikTok suppresses when you advertise an outside website. But go to my website. It's my name. It's just kennethsuna.com. Go to my website, click on the menu, and look through all the resources I have there. They're totally free. My free resource guide will go to every website I use to do my own research. There's no email sign up. There's nothing like that. Tesla, we have what's forming. Let me just flip the screen here and I'll show you. Let's see here. Flip camera. All right, so this is Tesla. And let me get rid of these. Remove. What you can see now is something called a double bottom. You can see here it was the low price point. What are we on here? Is this a 20-day chart? This is a 20-day chart. So on December 13th, it was in the 227s, and we come over here and it's almost exactly like you could draw. We're gonna do it right here. We're gonna go add drawing. This is a right click, add drawing. We're gonna go trend line, and we'll connect it, and you can see that it almost exactly connects. The concern is that it broke. So if it was a true double bottom, it would have stopped in the 227s. It would have consolidated it would have consolidated, or at least it would have gone right back up. But here you can see that it actually broke this double bottom support line and it's going lower. So for now, for the person who asked if it could get to 220, anything is possible at this point. I would be monitoring. I would be setting up alerts if you wanted to buy it at 220. We're talking about hypothetically, just for an example, Tesla's 226. So if you wanted 100 shares, it would cost you $22,657. If you're thinking it's going to get down to 22 and that's where you're waiting to buy your 100 shares, just as an example, because the math is easy, you would be saving around $663. Is it worth it for you to save $660 when you're willing to invest $22,000 to get it at a price that it may or may not get to? It might drop to 220, it might not. So in my opinion, or what I would personally do if I wanted to buy Tesla because I thought it was going to drop to 220, is I would start accumulating slowly now, just in case I was wrong. So in this hypothetical, you wanted 100. If you wanted 10, if you wanted 5, you can adjust it. But I would probably be going to 25 shares at a time if I wanted 100. If I wanted 10, I'd be doing 2 or 3 at a time. And as it got closer to the 220s, maybe I would go a little heavier. And I would also be monitoring the next support line to see where it could get to even lower. So we'll go back out now to a 1-year chart. This is a 1-year chart on Tesla. It's a lot more volatile. So here you can see this is our double bottom just in this little time frame. But when you zoom out, this thing is crazy. The most recent support lower than that would be probably down here in the 190s. So there's a lot to look for on a chart like Tesla. We can also do a Fibonacci retracement, which would connect the high to the low. You right click again, you click on that one that says retracements. You connect the high to the low, and this will give you all the potential support lines on where the stock could stop along the way if it started to pull back a little bit. Now I gotta go read the other comments. Kramer mentioned the Bitcoin and BlackRock Coinbase benefiting from the Bitcoin ETF. Yes, I think they will do very, very well. The thing about it is, this Bitcoin ETF is that you have a lot of younger people who are ready to go. They're buying Bitcoin like crazy. They don't care. They believe in it already. You have a lot of people who are a little bit older or a little bit more weary of cryptocurrency. They can be young too. But generally you have it in two different groups. You have the people who love it, and you have the people who don't trust it and they don't know what it is, and the mainstream adoption isn't really there yet, and so they're suspicious. The fact that all these big hedge funds now are finally being able to have these Bitcoin ETFs, you're seeing stuff like BlackRock and Vanguard and whatever buy them, gives the people who were unsure a little bit more trust. You know, it seems a little bit more credible to them now. Oh, well, Vanguard is doing it. Oh, well, Vanguard. So that's how you have it. You have the people who love it no matter what, and then you have the people on the other side who are like, I need to see more mainstream adaptation or adoption or whatever. And now we're getting it. So Coinbase, so you're going to see a couple things. One, you're going to see people who want to buy these Bitcoin ETFs. Two, you're going to see people who want to buy their own Bitcoin. And so they're going to go and they're going to open a Coinbase account. And maybe some who do both, where they want the ETF and they want to own their own. I don't know why you would do that. I would just buy it outright on my own. But maybe that's what it'll do. Maybe it'll spur growth. So Coinbase could definitely benefit from this. All the crypto exchanges could. Today, Coinbase is down a little bit, but you know, it could be one of those buy the rumor, sell the news. If you look at Coinbase stock in the last 12 months, in anticipation of this exact thing happening, Coinbase was up 239%. 239% in the last 12 months is insane. So this could be a buy the rumor, sell the news. You know, like, oh, this Bitcoin ETF, it's going to come. It's coming this year. It's going to happen. The SEC is going to do it. Everyone's buying in. The stock goes up 240% or whatever. At a certain point, people start taking profits. I remember a few weeks ago, Coinbase was up 300% year to date. Now it's up 264, so it's pulled back a little bit. There's been some profit taking over the last few days where the fund has seen that massive gain kind of correct and pull back a little. So I think it's a buy the rumor, sell the news. The Bitcoin ETF is now here. They've been approved. Coinbase could pull back a little bit. But once we see more people rush into Bitcoin, Coinbase could go back up. John says, what advantages do programs like Capic and Mergent have over Google Finance? I have absolutely no idea. I've never heard of either of those companies you've mentioned. Capic? I have no idea what these are. Sorry. Do you like any coffee companies besides Starbucks? I think, you know, Starbucks is trendy right now because they're supporting Israel and people don't like that, and they're boycotting, and they are anti-union as well, and so people are boycotting even further. So short term, I think they're going to have issues, but the boycott of Starbucks seems like it is like a uniquely TikTok thing. You know, like people on TikTok, when someone's like making a video in their car talking about the day they had and they're drinking a latte, the comments are all like, boycott, 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 and people are losing their minds. But when you go outside of TikTok, the Starbucks up the street from me is jam-packed all the time. All the time. On TikTok, everyone's very passionate and they're very angry, but in the larger world, we were in the airport a few weeks ago, the line to get to the Starbucks was insane. So I think Starbucks will be fine long term, and they're hard to compete with. They're the largest. You know, Dutch Bros, people like Dutch Bros. You know, as a small regional coffee chain, everything can exist. You know, more than one company can exist, but only one seems like the dominant play. Although I think Dutch Bros is up. The symbol is Bros, BROS. Dutch Bros is, oh, it's actually down in the last 12 months. It's down 13% because I think it's going to be an uphill battle for these guys. If I were to go into a coffee company, anything other than Starbucks or McDonald's, which isn't really coffee, but they have coffee, anything other than Starbucks seems speculative to me. Hey, Evan is in here. This is great. Conversations with Evan. Evan is a friend of mine. He makes a lot of crypto content. Please go follow him. His other friend, who's also a friend of mine, Alex Popovic, also covers crypto extensively. Go follow him as well if he's in here. If he's not, then Evan will get all the follows. If you have crypto questions, if there are enough crypto questions, and Evan, if you want to hop in for like 5 or 10 minutes to answer some, this is going to be great. We can ask a lot of questions. Stick with Ford. Ford's ticker symbol is F, and their dividend safety grade is also F. So I would be very cautious with Ford as a dividend play. Long term, I think Ford will be fine, but people buying it because of the dividend right now, with a dividend safety grade like F, there's like a 64% chance based on like analytics that they could cut the dividend. So that makes me a little nervous. I'm frustrated with these trend niche stocks, to be honest. Trendy niche stocks like what? I'm curious because I don't know what I was talking about. Why does CPI send so many people into the market into a selling frenzy? Because inflation is going up and they're trying to bring it down. And it went up a little higher than they were expecting. So I invest why I could afford on TSLY, and it's absolutely junk. I understand, yeah. Are you an IRS Sect 475 trader? I don't know. Probably not. First rule, don't invest in what you can't lose. Yes, Bob, 100 billion million %. Okay, I'm all caught up. I'm going to go to the bottom now. WWE, hey, Weeble Rich. WWE outperformed Apple over the last 10 years, believe it or not. This is crazy. Most people say, like, wrestling, that's stupid. You thought I was Jackson Galaxy for a second? Hold on, I got to look that up. Who's Jackson Galaxy? Oh, come on, man. You're blocked and reported. Niche stocks. Oh, Tesla, Apple, Starbucks, gotcha. WWE. So niche stocks actually can be great. I'll tell you a story about niche stocks in a second, but let me answer Weeble Rich. WWE, I bought it because I love it. I'm a lifelong pro wrestling fan. I wanted to be a pro wrestler. WWE outperformed Apple in the last decade, which is funny because most people go like, pro wrestling, really? But their launch of the WWE network and then the sale of the WWE network and all the other things that they've been doing, the merger with TKO, propelled the stock to all-time highs. It outperformed Apple. WWE is part of the reason that I own this home that I'm in right now. I was able to sell a lot of shares to buy my home. Niche stocks. So in 2003, I graduated high school. I got an Apple computer. My friends were getting Apple computers, iTunes, gift cards, iPods, all that. And I'm looking around and I was like, I got to buy this. So I called my mom's broker because 2003. And he was like, it's a niche product. Don't waste your money. Niche products have the most loyal customer base on the planet, which means they keep returning. So niche products, that broker was an idiot. Niche products can be the most lucrative investment. Although other times you can have something like Peloton, which has a very niche core. But outside of that small group of like Peloton loyalists, you also had the people who were like, I'm buying it because it's a status symbol. I'm buying it because it's the most expensive, and therefore I'll stick with it, which we all know is not true. Most people buy these luxury things that they think will motivate them to do it, and then they don't do it. So I get it. How much do you make in trading? I make enough to be able to live on my own and be very happy. I didn't think about people trying to boycott. I just thought they were obvious of a company to talk about. I think I'm done with trend niche stocks. Pass. Weeble Rich says pass. I don't know what you were talking about. I'm sorry. Okay, let me go to the bottom now. I don't know about Hong Kong. Long-term stocks for kids. I'm trying to teach them. So here's the best thing I would do if I had kids. I would open up an account for them, any sort of, savings, college 403B or whatever it's called. I don't know. But I would open up some sort of account for the kid or a custodial account for them. And then I would put in an S&P 500 index fund, a dividend paying fund, and a tech heavy fund like VGT, QQQM, something like that. I'd buy those three, maybe a real estate investment trust as well. Realty Income, the ticker symbol is O, is one of my favorites. So I would buy an S&P 500 index fund, a dividend fund, a growth-based fund, and a real estate investment trust. If you want, there's a pinned video on my homepage where you can go and watch them, where I cover all of those. As far as individual stocks, I would start getting your kids. I would start talking to them about the things that they love. So, an example would be me. When I was a little kid, I still love McDonald's. But my mom took me to McDonald's one day for an after-school snack, and said, if you love McDonald's so much, why don't you own it? I was like 8, and I was like, I can own McDonald's? And she explained what the stock market was and how I could be an owner in what I loved. And I was obsessed. I was like obsessed. I was like, and look, if the internet had existed when I was like 8 years old, I would have gone nuts. I would have asked every holiday for money instead of gifts and toys. I would have bought stock. I would have been loaded. But different time. I would sit down with your kids and I would start asking them about their favorite products, their favorite toys. Just because they like something doesn't necessarily mean it's going to be a great investment. Like, toy stocks don't always do well, like Mattel, for example. Let's see here. Mattel, let's see. Over the last 5 years, it's okay. Over the last 5 years, it's up 50%. In the last year, it's down 8.5%. There's no dividend. So, but this also gets them talking. I'd sit them down and I'd say, hey, what do you love? They'd say, oh, I love McDonald's. Well, did you know you can own it? Maybe your kid loves trucks. Well, who makes trucks? Ford. Let's take a look at Ford stock. You live on your iPad, right? Kids live on their iPads. Who makes that? Apple. Why don't you own some of that? Get them discussing. Tell them that they could be owners in these companies. I think little kids would love that. Walking around the playground telling you that they own toys. That they're like the co-owner of some company. Roblox. I don't know much about Roblox. I know that little kids are obsessed. In the last year, it's up 31%. Since going public, it's down 40%. Their grades are terrible. Their valuation is F. They're very overvalued. Their growth is rated at a D. Their profitability is F. The only good things that they have are momentum at an A- and revisions at a B-. Their one year price target is $43, and the stock is currently $41, so it's like 4.5% upside. What about showing love? What do you know about pulling up? I'm not sure I understand the question. So Sony is another one that they, if they love Sony, you might want to look at some of the video game companies. What's the big one? What's the big video game company? Video game stocks. Let's just do that. Video game stocks. Oh, Activision, Take-Two Interactive. There are other companies that are like video game adjacent, like Nvidia, like Sony, like you mentioned. I would probably stay away from stuff like GameStop, Ubisoft, Capcom. There's a lot of video game companies out there. And I would just start scrolling through and looking at the 1 year price targets and reading a little bit more about these stocks. But yes, 403B, yes, that's the one. Kindhearted says, I'll stick with VOO, SPY, and IBM. That's a good choice. Let's see. What is your opinion on McDonald's at this price? Let's take a look. I like McDonald's. It's $2.91. They have an okay... Sorry, I just got an email. They have an okay dividend at 2.27, but what they really have is 22 years of dividend growth, which is great. Surprisingly enough, McDonald's has a dividend safety grade of D, which surprises me. But let's take a look at a 1 year price target for McDonald's and see what the analysts have to say. 318 is their price target. That's a 9% move to the upside. There are 30 analysts covering McDonald's with an overall strong rating. But you're not really buying a company like a McDonald's or Altria or Coca-Cola for growth. You're buying it because they dominate that space and they're everywhere. So they've kind of maxed out their growth. Like McDonald's can invent a new drink or have a new hamburger. Coke can have a new soda. At the end of the day, nothing's really going to move them into growth territory again. They're more like large cap stock that can give their profits away in the form of a dividend. So somebody said to me the other day, like, why are you investing in Altria? You think it's going to go up? And I was like, no, I don't think Altria is going to go up. Not a lot. I'm in it for their dividend. I'm sorry, I don't want to deal with niche stocks, not worth it. Hey, don't be sorry. That's the thing about investing. You have to pick what's right for you and what makes you comfortable as an investor. The worst ones are the ones where people buy a stock because they think everyone else is buying it, but they don't know what they bought. They don't know why they bought it. I had a DM from this guy the other day who said, what do you think of this company? I, first of all, had never heard of it. Second of all, it was a penny stock. It was like 19 cents. And he was like, what do you think? I'm down 98%. What should I do? And I was like, I think what you do is you've learned a lesson that if you buy something speculative, number one, only put in what you're willing to lose. Number two, take profits. Number three, cut before you have big losses. Roblox is a sham. Starbucks stock we just talked about. Good morning, Mario. Hello. I don't share how much I make, so you can keep asking, but I'm not going to tell you. Crypto is greater than stocks. What is the do your own research guide? Mahesh, go to my website. It's my name. It's kennethsuna.com. Click on the menu. If you're on your phone, the menu's down here. If you're on your computer, it'll be up here. I get a lot of older people saying, I looked on your website, I couldn't find it. It's in the menu. Click on the menu. I have three resource guide. I have a resource guide and 2 templates. Actually, wait, I think I have 3 templates now. No, I have 2 templates. I have 2 templates and a resource guide. And they're all totally free. Let me just show you. They said you're not a real investor. Who said that? I don't really care. I mean, doesn't matter what they think. What do you think Tesla will be in the next 12 months? I'm gonna say probably higher. I think Tesla's a growth stock. I think they're gonna always do fine. They will have times where it's less volatile. They will have times where it pulls back. But long term, I own Tesla. I'm holding it. Unless something really, really catastrophic changes with the company, I'm probably going to hold it. The 1-year price target average is $249. The highest price target is $380. The lowest is $85. I don't think that's likely, but anything can happen. And I believe in Tesla long term enough to say that if it got to 85, I would probably buy a lot more. Unless something really, really bad was happening. Okay. Here's my website. Let me just show you a little bit about my resource guides. So this is my website, kennethsuna.com. When you click on the menu, which is right here, here's my menu. You click on the menu, which ETF is better, fundamental analysis template, and my free resource guide. The resource guide has every website that I use to do my own research, all the links to everything, and it is totally free. You can see there's no email sign up, there's no PayPal or Venmo or Patreon to unlock it. The fundamental analysis template looks like this, but if you click on it here on the link where it says here's the link, it is clickable, and you'll be able to add and input your own data. You can compare, I put 2, so you can compare 2 companies, like which one is better, Coke or Pepsi. You can compare everything you need here. And if you're thinking, well, hey, I don't know where to find all of this stuff, don't worry. There's links right here at the bottom to show you where to find it all. Where's the last thing? The ETF one I just launched 2 days ago or yesterday, I can't remember. Same thing, if you click on it right here, which ETF is better, it's clickable, but this is what it looks like. It'll show you everything you need. And like I said, I use Seeking Alpha to find all of the information that you're going to need in this template. It has all the important things, everything I personally look at when I'm comparing 2 ETFs. So this is my free resource guide. It is on my website. There's also a document here that says Dividend School, because I get so many comments from people who do not understand dividends. There's so much misinformation about dividends. So I made this little document here that you can go on and you can read that as well. Evan, I don't know if you're still in here. Crypto ETFs are a topic. Is there any current ETFs for crypto on an exchange? Does a price target mean that the company is going to sell it at that point? No. The price target doesn't mean that a hedge fund or a brokerage is gonna sell anything. I mean, they obviously they could, but there's no guarantees. Just because it hits the target doesn't mean they'll sell it. At that point, what they'll probably do is reevaluate and look at the next earnings reports and the next guidance that the company issues after their earnings. So the company has an earnings report. They say, here's how much we made, here's how much we lost, here was our revenue, here was our, here's how much we put down on our debt, here's the blah, 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 and they'll go over everything. And at the end of the earnings call, they'll say, and next quarter, we expect to do X, Y, and Z. So in the eyes of Wall Street, the earnings are old news, right? That's the past. What's going to happen in the future? Do you think you're going to sell more, or do you think you're going to sell less? Do you think you're going to see a slowdown? Do you think you're going to have some layoffs? So usually they'll reevaluate, and you'll see the analysts come out after an earnings report. Usually like an hour later, up to like the next day, they will come out with like an updated price target going forward. Can you explain what's happening with SWVL? SWVL. Swivel Holdings? I've never heard of this thing. It is up 189% since January 2nd. I don't know what this is. Could be a pump and dump. Swivel Holdings? There's literally no news about this company. My guess is pump and dump. I'd be very, very careful on a penny stock that is over 180% in just a few days. They have 6 million shares on the market, which is nothing. My guess is pump and dump. I'd be very careful. Fortnite is all they play. Roblox. Index funds. Okay, let me go to the bottom here and I'll work my way up. Can you please give the website link in chat? Yes. But Don, this is for Don64. I cannot write .com because TikTok TikTok blocks any comment where you say .com because they don't want people spamming the chat with like links. So I'm putting my name. It's Kenneth Suna, all one word, obviously, kennethsuna.com. And then you'll find my free resource guide in the menu. Thoughts on AI stocks and quantum computing? I have in my speculative playlist that's on here. I think it's called. Let me see what the playlist is called. I think I have a growth stocks and ETFs, and I also think I have a speculative investing playlist that's called speculative investing. I would check those out. What is this? I don't know. Bitcoin ETFs. No, Zaid says it was a joke. I'm sorry. Don't worry. Don't worry. I get it. What do you think of Elf? I like the movie. Oh, Elf Beauty. I mean, it's $1 billion industry. The beauty, Ulta, Sephora, which is I think owned by Louis Vuitton. Elf is up 203% in the last 12 months, which is insane. In the last 5 years, it is up almost 1,800%, which is insane. In the last since going public in 2016, Elf is up 451%, which is insane. Let's type in here and see what their 1-year price target is. So Elf currently has a 1-year price target of 142, and the stock is currently 155. So it's already surpassed their 1-year price target, or 12 months. So this is probably an older price target. Their highest price target is 178. 178 per share. It's currently 155. Their lowest price target is 119. There are 13 analysts covering ELF, and of the 13, 0 give it a sell, 3 give it a hold, and 10 recommend that you buy it. What about IonQ, or I don't know how to pronounce the symbol. IonQ, let me open it up on a couple of screens here. It says that it is in the information technology hardware, storage, and peripherals sector. The stock is up 200% in the last 12 months. Since going public in 2021, it's only up 5%. They have a warning. It says, warning, IonQ is at high risk of performing badly. They have inferior profitability and decelerating momentum. Their grades are terrible. But if this is a newly public company, that's kind of normal. New companies aren't profitable, sometimes for 5 years or more. Their profitability grade is F. Their momentum is F. Their revisions is D-. Their growth is B-. Their valuation is C+, which means that it's like kind of fairly, maybe a little valued, fairly valued. Year to date, it's down 6%. And they have a 1-year price target of $16, which is a potential upside of 43%. There's only one problem, which is not a lot of analysts are covering the stock. I view it as highly speculative, so I would only put in what I was willing to lose. Someone asked about a Bitcoin ETF. There is one called BITO, which is the ProShares Bitcoin Strategy. But I'm not sure how it works. I don't know if Evan is still in here. I can't give financial advice. So someone is saying WWE for long term. I can't tell you. That's your decision. I've held it since 1999. I sold a lot of WWE stock to buy my apartment or my home. So, I can't tell you what to do. You have to make your own decisions. Trenton says, how do you stay on TikTok with hundreds of copycat accounts messaging people constantly? Well, it's extremely frustrating. I can report them all day, every day. There are probably over 1,000 copycat accounts of mine out there trying to scam people. So please be careful. I make it a point to not follow anyone back. So I can say, if you got a follow from me, it's probably a scammer. Block them and report them. And a little common sense. Like, if someone messages you and says, like, how are your investments going? I can help you. It's probably not me. It's probably a scammer. Please be careful. I've gotten the worst DMs I ever get are from people going like, did you get my money? Or, hey, I changed my mind. Can I have my money back? And I go like, what are you like the first time that it happened to me, I was like, what are you talking about? And they were like, I sent you money to invest for me from our earlier conversation. And I was like, that was a scam. You got scammed. Sometimes people like realize it right away and they're like, oh shit. And other times people are like, no, I wouldn't get scammed. I want my money back. And I'm like, I don't know. You didn't send it to me. So, what are you going to do? IBM has been around for 150 years, indeed. PanW, Palo Alto Networks. Palo Alto is currently $321. It's up 139% this in the last 12 months. They don't pay a dividend, but with growth like what they've had, who cares? In the last 5 years, Palo Alto is up 392%. In the last 10 years, it's up 1,400%. Their grades are... Valuation is F because it's very overvalued because it's had such a big run. Sometimes people don't like that, and sometimes people don't care. They look at it and they go, it's a little overvalued because people are willing to pay more now because they think it'll be more valuable in the future. Other times people go, it's so overvalued that if they have one bad quarter of news, the stock could tank. Both things can be true. Profitability is an A+, momentum is an A-, revisions is a B+, their grades are fantastic. Their 1-year price target, according to the analysts, is $317. and the stock is 322, which means they've already surpassed their 1-year price target. Their next highest price target is $400. There are 33 analysts covering Palo Alto. 0 of the 33 recommend that you sell it. 4 recommend that you hold it. A hold means if you already own it, you don't sell it, you don't buy more, you just hold what you have. And 29 recommend that you buy it. What's the difference between trading on the regular market versus futures? Futures are basically like a contract that you have. Think in terms of like farmers or something like that, like wheat contracts like that, or orange juice. It's not a stock. You're not necessarily investing in a company. You're investing in a contract like oil or some sort of commodity like wheat or grain or oranges. I don't trade futures. I prefer to stick with the stocks. Kenneth Suna. Oh, that's me. Let's see what we've missed here. Okay, let me catch up to the bottom now. Trenton, let me read what Evan is saying here. What are your thoughts on TSLY lately? By the way, Evan is still in here. Evan, if you want to jump on for a few minutes, if there's a lot of questions about Bitcoin and Bitcoin ETFs, Evan is the guy who can answer those questions for you. So Evan, feel free. I can invite you if you want to join, because I'm seeing a lot of comments about Bitcoin. It might make sense to have Evan jump in for a few minutes and answer some Bitcoin questions. My thoughts on TSLY. WWE stock is now called TKO. They've just merged, and I'm just too lazy to change this. WWE merged with UFC, so it's one company under the TKO ticker symbol. TSLY is going to be volatile as Tesla is volatile. If Tesla becomes less volatile, TSLY will lose value, and their dividend will decrease, which means you could be in real trouble, which is why it should only be a small part of your portfolio. My thoughts on Med? I've never heard of it. Medifast. Oh, Medifast. Medifast is. Let me get Evan in here.
Hey there, how are you, Ken?
Hey, Evan. I had my volume turned off. Now I can hear you.
Hi, test check 1 2.
Yes, I got you. How's it going?
Hey, good to be here. I'm doing very well, thank you. It's been a busy couple hours, and I've had a good morning, and I'm happy to say hi to your folks and answer crypto questions or give my take on the ETF. When it's convenient for you, I'm here to just hang out in a box in a corner while you get some questions, and just good to see you, man.
Yeah.
Hope you're well. Happy New Year.
Thanks to you. Same to you. These Bitcoin ETFs, can you give us a little bit more information on why it took so long to get these things approved?
Yes. For context, this has been a 10-year battle with the SEC. Since Bitcoin came to the popular parlance in 2013, they have had many opportunities to offer regulation in the direction of an instrument or even some guidelines. And they have rejected, they have moved the goalposts. And I think that this decision, while monumental, really comes at a cost to the SEC. I recommend anyone who wants the overview Google's Gary Gensler and Hester Pierce's opinions. Hester Pierce gives an excoriating critique of her own agency and says, regardless of this decision, our actions have cost millions of dollars, have wasted millions of hours of limited staff time that could have been spent on other things, and ultimately really damaged our trust, not only with the crypto industry, but the rest of the world watching how we regulated this. So I think it's an awesome opportunity, and I'm happy to talk more about it, but that's sort of the context around it. Big decision, big implications.
Now, do you think all of these ETFs now buying in like Vanguards and the BlackRocks, that they'll buy the majority controlling stake of something that was meant to be like for the people?
Yes, I do. I think there is now an incentive for them to do that. Firstly, because there are many people who will want to invest in a Bitcoin ETF that wouldn't have chosen to invest in Bitcoin otherwise. Maybe because it's intimidating to them. They don't want to be their own custodian. They don't trust Venmo or Robinhood. And now that Fidelity, for example, has an ETF, they need to purchase Bitcoin in order to satisfy the potential and current demand. They need to be able to cover those ETFs so that people can use them according to the guidelines. So one, absolutely, those investors, many of them have already been buying Bitcoin. And now they will likely gauge the market and continue to do so. As demand increases, other companies are going to want to do that. They're going to want to pursue other crypto ETFs. I think it is a mixed bag for investors, but generally, my opinion is it's a net good thing that they're here.
Do you think also that it'll kind of like rein in the volatility of crypto now that they have such large stakes, or do you think it could still be?
No, I think most crypto will continue to be volatile. Bitcoin specifically will continue to be volatile. And I don't think this will really have an impact on that, at least certainly not in the short term. It will cause things down the road that may stabilize it. I personally think the price of Bitcoin will not be super volatile, but will probably continue to change forever.
And do you think that this opens up the door for other ETFs, like an Ethereum ETF,
Yes.
or maybe like an altcoin ETF, like an S&P 500, where they own a variety of things? Do you think that that'll be the next one that we'll see like?
Yes. The first one you're likely to see, because it's already in the works, is an Ethereum ETF. You can Google it. I absolutely think it will open up other instruments, baskets, mutual funds. I think it will, beyond that, what I'm interested in is it's going to open the door for people to see crypto assets as assets. One quick example. In Florida right now, it has been very difficult for people to get a mortgage for a house if they don't have assets, if they don't have cash. Crypto people, especially newly wealthy crypto people who have a lot of Bitcoin, until now really couldn't use it. In Florida, 3 years ago, they enacted a bill that made it possible to use your Bitcoin as collateral or to get a mortgage. Huge change. This kind of instrument being not just legalized, but welcomed into sort of common parlance, is going to pave a way for that kind of use of these assets as well. Really going to open up the flexibility of digital tokenized money.
And people like Gensler, they were against crypto, right? Like, I mean,
man, Gary Gensler is like he's entered his villain era. He's our Dark Knight. He's our Joker. He taught one of the best courses on blockchain at MIT in 2018. It's free online. You can look it up. I highly recommend it. And his stances then laughably contrast with the policy decisions, the unhelpful things he's done. He is a villain in the crypto community, and I think he has been negligent and irresponsible regardless. But he is a complicated figure.
What do you think changed for him? Because he was so into it, and now he was so anti.
The position, the incentives changed. Now he is in a position where he is an appointed government official who is supposed to serve the people, protect investors, but has a lot more competing interests in that position than he did as a visiting professor at MIT.
And how do you take like all these hedge funds who were like so anti Bitcoin on television, but were also accumulating? I mean, it's kind of like that's how it goes.
They got to make money somehow. I don't blame them. I don't think it's ethical. Jamie Dimon is my favorite example. It's in their interest to do things like that, and it's unfortunate. And Jim Cramer's got to make his money somehow.
Right. That's it's funny. It's funny how different the crypto space is to the stock market, but also how similar. You know, like they'll come out and they'll just trash the product. They'll say this is the worst product. The stock is garbage, like Apple. They'll come out and they'll just downgrade it and tell you it's awful. And then they're like accumulating it like crazy. And then they come out after they're downgraded and they say, well, now we give it a buy and we love it. Like,
yeah, exactly.
You know, so funny how they're both so different but both so similar.
That's right. If I could just say one more thing, I would say, because people ask, is this a good or bad thing for crypto? And I just want to be clear. I think it is what you make it. I think it's awesome that people who haven't had the opportunity, the wherewithal, the knowledge to invest in crypto before now will start to explore tokenized digital assets. But I absolutely advocate anyone interested about it learns about the options to become your own custodian as well. When you own an ETF, you own a share of something. You're relying on the intermediary to do what they say they're going to do. cryptocurrency gives you an unprecedented, I want to be clear, opportunity to directly own a digital asset. It's like gold, but you don't have to carry it in a backpack or rent a truck to take it with you. And therefore, because you can be your own custodian directly, you should know that that's an option and how to do it. It comes with risks, as any investment does. But it offers a sort of personal autonomy that I think is tremendously empowering, and it's an exciting innovation. So that's my kind of last piece on the ETF. And I'm happy to answer other questions. I'd love to know what you think about it, but I know you get a lot of questions, so don't feel you gotta.
I do want to answer your question, but I do see a comment here from someone whose username is Big Boy Steve, and he says, "Why play the stock market? It's too risky. Just put money in the bank and earn guaranteed money." The high interest rates that you're seeing right now are I think temporary, and as soon as the Fed lowers the rates, the interest rates are going to come down. And high yield savings are great, but they are not investments. You will never save your way into retirement. You have to invest. So just please, like for the people who say, "Oh, it's not worth it to put the risk." Index funds make it a lot safer if you're worried about individual stocks, and the returns are way higher than 4% high yield saving that could be temporary.
Yeah, savings accounts are still risky.
Yeah, right. Yeah, people put all their money into it because they see a 4%, and then they cut the rates and it comes down, and it doesn't outpace inflation. So I'm very personally, I'll go back to your question. I'm very excited. Should we invite Alex in here too?
Yeah, let me do the heavy lifting while you answer.
Okay, I think he's in here.
Oh, he's here.
Yeah, he's in the chat.
Hey, Alex.
I've invited him.
And actually, before you answer the question, can I just quickly introduce myself and Alex and say we are co-founders, friends of Ken's in the blockchain space. We've been here for years. We're not going to try and sell you anything. We want to help you learn totally for free. We do a show also live Tuesdays, Thursdays, 7 a.m. Central, 1 p.m. UTC. And you can find our Discord free. Chat with us in the meantime in our profiles. We'd be glad to see you there. Alex, love you, man.
Hello, guys.
Hey, hello. So the question here, Mary is asking, will it affect the price of coin stock, like Coinbase, this ETF?
Probably.
Either of you have thoughts?
I agree, probably. I think ancillarily, it's good. It's good for them. Their narrative is, you need to change the system, adopt crypto. So yeah, it'll probably be a boon in the long term. Who knows in the short term? But
right, yeah. So Coinbase was up almost 300% last year. Now it's up 231%. I think it was definitely a buy the rumor, sell the news, with everyone saying, "Here it comes, the Bitcoin ETF. It's coming. It's coming." Everyone loaded up, and it shows. The stock was up 300%. Then, when it gets closer to becoming a reality, people start saying, "Okay, it's going to happen. I'm going to sell. I'm going to take my profits." So, like Evan said, I think short term, who knows, but long term, yeah.
What's making my decision, what's influencing me is Coinbase is the company that Robinhood, that Venmo, that many of these big time people use as their exchange when they're using an exchange. They are going to get an influx of business. They're going to have, it's a big time macro, micro rising tide moment for Coinbase specifically, but also anybody who operates a trusted crypto exchange. Kraken, I don't know who else, Alex, is having a field day about it.
I mean, I would imagine that finally getting some sort of regulatory clarity here might spell better for people like Gemini, who have been trying valiantly for years to just get a copy of the rule book so that they can operate legally. And
Circle is about to do an IPO.
Yeah, I mean, exactly. So the domino's starting to fall. I mean, Circle applied for an IPO, yesterday or today? In the wake of this being approved. So hopefully this kind of sets the precedent. I just did a video on Hester's opinion and posted it, or it's posting as we speak, hopefully. But she made a couple points that relate to that, right? Like, hopefully this finally allows innovators to stop being squandered and kicked out of the United States and actually try stuff. The SEC has been exercising its bias in full view of the public for years, a decade, and that's not their job. They've applied different rules to the Bitcoin products than they've applied to everything else they've been approving. They've been moving the goalposts for years. It's a scathing editorial commentary on the SEC's business dealings over the last couple of years. It's definitely worth a read for sure. But
we touched on it a little.
About let's see here. She says, what's the difference between having my crypto in like a locker, like a wallet, versus in an ETF? And she says that digital keys and wallets always make me nervous.
So I gave an answer to this, but I want to hear what Alex says.
No, it's a really, really good question. So the difference is really just whether or not you actually own the stuff that you're investing in. And that's kind of the benefit of like owning your own Bitcoin. It's not for everybody. There are complications that accompany the idea of self-custody, right? Like you're responsible for the security of your own stuff. And so the choice that you would need to make as an investor here would be whether or not you value your own security and you want to take on the responsibility of owning your Bitcoin and keeping the keys safe and all that sort of stuff. Or if you feel comfortable with your financial institution of choice, whether that's Fidelity or Charles Schwab or whoever, to do the custody for you and allow you to just keep investing in the vehicles that you're used to using for your IRA, for your 401k, for whatever it is that you invest in. So it's really just sort of a give and take equation. Do you want to own all of your own stuff and be in charge of it with all of that added responsibility and risk that you could lose your password or do whatever? There's no recover password option for a wallet key, or do you want to use your financial institution of choice and get exposure to something and use that as the stepping stone to toe dip into the space, learn about stuff before making the momentous decision to assume all that risk for yourself?
And I think there's a case to make that there's a good for both. Just as you would diversify into stocks, REITs, whatever, have some cash on hand, it's not a bad idea to custody some money that is yours, scot-free, nobody can censor it, it's permissionless, good anywhere. And also not a bad idea to have some, I think FDIC insurance may soon, extend logically, it seems, to something like crypto on an exchange. So something to think about.
Let's see here. This is from Willow, and I saw Evan responded, but I'll read it out anyway. Do you think multiple good crypto influencers like you two should get involved in politics to make a change? So I guess my question is, when are the two of you running for president and vice president?
Alex for Senate.
I've talked about this before. I shaped my entire career for the last 10 years to run for office one day. And only in the last 2 or 3 years have I pretty aggressively abandoned that aspiration, just because of like how alienated I feel and my voice feels, in the way that the government machine works at this point. But I mean, I got my degree, I enlisted, I had a plan for federal law enforcement, I had mentors in and around federal law enforcement to get ready. I mean, friends of mine are Senate aides. I've had like meetings and mentorship lunches with U.S. senators. That was like my whole trajectory. And I've found that I much more enjoy like my platform as a content creator instead, without having to subject myself to the ridiculous onslaught of bullshit that is being a politician.
What I wish is that they would reach out to the creators who have a certain knowledge base to educate them, because I've seen you interact on Twitter or X now with Elizabeth Warren, saying like, hey, why don't you consult with us and bring us on so you can get some knowledge before you speak about these things. And I would love to see that.
That's my number one gripe with Congress, really. Like, if you think about what it is to be a congressperson, you have carte blanche and almost unlimited resources to learn anything you want from anyone you want. And we do it in every other industry. Whenever there's like, the impetus for legislative creation of new literature about an industry, you call a subject matter expert. And they're unwilling to do that here. And they just sort of make shit up and parrot tired talking points about it. And so I wrote her an open letter that got a shitload of interaction, not from her. Basically just saying like, look, I will come at any point. I'll foot the bill for my travel. I'll put myself in lodging. Like, I would absolutely love the opportunity to help you guys understand the stuff that you're set on making laws about that you clearly don't understand. It would be really cool to see that opportunity taken. Because I mean, if I was in Congress, I would be interviewing expert witnesses all the time, because they can't know everything, and yet they're tasked with writing the rules. So it makes no sense.
Edwin asks a question which we've already answered a little bit with Evan, but since Alex is in here, maybe you can add into it. Good morning. What are your thoughts on the recent news about the SEC allowing a Bitcoin ETF? We have thoughts.
Yeah. In a nutshell, my thoughts are it took them way too long. I agree with what Hester said, that in them dragging their feet on this, they created this crazy frenzy hype storm around it that is not warranted. It should have been done years ago. I think that overall, it's a good thing for the industry. I do recognize people's concern about, allowing BlackRock to own your Bitcoin. But I always say this. I just said it on our show. I'll say it again. No one's got a gun to your head. You don't have to sell your Bitcoin if you don't want to. And you don't have to buy your Bitcoin through a spot ETF. You can still go through an exchange and get it that way if you really want to stay true to the ethos that is blockchain and Web3. So overall, good thing. I understand people's concerns, but I think that this does a lot to validate the industry and hopefully help move innovation forward.
All right. It's 11 o'clock, which means I'm going to wrap this live up anyway. But are there any last minute questions? And by the way, for anyone who's new here and wants to learn more about crypto, these two are must follows. So go follow Evan, go follow Alex. They go live every Tuesday and Thursday at 7 a.m. or 7:30?
7 a.m. Central Time, 1 p.m. UTC.
All right. They're must follows. Go follow them. They can help you with your crypto questions. This one is, do you have a best ETF for Bitcoin now?
None of them are available yet. They're all going to be listed soon. There are 11 that have been approved. You can Google the names of the companies: Fidelity, BlackRock, ARK, among others. Choose the one that aligns with your investment goals.
Okay. All right, everybody. Goodbye. Thanks for watching. Thanks for following. Go follow Alex and Evan. They're great.
Thank you, Ken. Thanks to everybody.
Absolutely. Bye, guys. I will be back on Sunday at 10 a.m. All right. Thanks for following. Bye, everybody.